Well, the US stocks did drop after the biggest rally in 9 months, and Asia's shares did trade on a slightly positive note. In fact, in terms of the US markets, well, the drop after the biggest rally in the 9 months is coming on the back of sector rotation as investors waited for the US Congress to approve the stimulus package. In fact, equity markets did come under slight pressure after upbeat reports on the strength of the economy, and the slight pullback in the sovereign bond yields did give some support to the risky assets. Following strong gains in the past few days, technology shares have dipped in the resumption of the rotation by investors after the stocks that have outperformed so far. S&P 500 materials and consumer staples sectors indices did rise. Dow fell close to around 144 points. S&P fell close to around 32 points to 3870. NASDAQ fell close to around 230 points to 13589, and Dow futures did trade slightly up overnight by close to around 80 points. In fact, the 10-year yield also did dip slightly below the 1.4% mark. This is after the yield hitting close to around 1.6%, which was a one-year high just last week. In Asia, shares did trade on a slightly positive note on Wednesday as global markets did consolidate post the rally that we have seen in the past few days. In Japan, Nikkei did rise close to around 0.2%. Topix index was up at a similar level around 0.2%, and stocks in Australia were up nearly around 0.5%. Europe's benchmark stock index did edge higher on Tuesday as stability in the bond markets gave stocks some amount of breathing room. In fact, major commodity-linked stocks reversed losses on a turnaround in metal prices. European shares also has seen some pullback though from the one-year highs in the month of February due to the spike in the bond yields on the back of inflation fears, leading to concerns in investors that interest rates may rise. This is, however, ECB officials in recent times have calmed the fears of a premature rise in borrowing cost. Eurozone inflation was also steady in the month of February, taking a break in what is likely to be temporary but sharp spike in consumer prices in the coming months as more economies reopen. The pan-regional stock 600 index rose nearly around 0.2% after marking the best day in the last 4 months on Monday. Mining stocks were among the top gainers as copper prices steadied near 10-year highs. FTSE and CAC were up close to around 0.4% and 0.3% respectively, while DAX was up close to around 0.2% in trade. Oil continued to fall as markets turned jittery ahead of the key OPEC meet scheduled this week. Brent crude did trade slightly negative by 1.9% to settle close to around $62.4 per barrel, and WTI futures in early morning trade were down close to around 0.4%, trading slightly shy of the $60 per barrel mark. Gold, on the other hand, did rise slightly by nearly around 0.6% to $1734 per ounce. Gold futures were trading largely flat at $1734 per ounce.